Hello everybody. I am running late today. Just thought I'd jump on. It's been a busy couple of weeks. I didn't make it last week. So I thought I'd jump on here for a few minutes and see if anybody's on and would like to kind of discuss a little bit. So I do have a couple questions already. One is just basically talking or asking more about what is a credit score. Um, and then why do we use those? Why is there's this push to why is there a push to build a good credit score and have a good credit score and have that mentality? And so what the credit score companies did a long time ago was um, uh, create this feel of a need that you need this score to help. This makes you successful. If you have a high credit score, that means you're successful. That means you're doing well with your finances. But we go to the statistics, and 78% of people live paycheck to paycheck, and of those 78%, a lot of those have high credit scores. So just because you have a high credit score doesn't mean you're doing well financially. But what it is basically they take anything old, or all of your old debt, or how long you've had it, how much debt you have, how often you get new debt, and then how well you pay it back. It's those four things. It's all geared around debt, and it's all right there, focused on your interaction with debt. And so if you have a high interaction with it, then you'll end up potentially having a high credit score. Now, there's all the nuances of why or how it goes, the algorithms of what goes into creating that score and kind of putting it out to whatever you make it. But if you have an 800 credit score, then you're spending a lot of time getting new debt, paying it down, getting new debt, paying it down, and you're playing the game, and that's what they want you to do, because you're paying a lot of interest while you're doing that. And so if you don't think about that and look at what you're paying for, whether it's credit cards or a car loan or a house. A house is one of the major things people think you can't get without a credit score. And we'll talk about that here in a minute. But you think about a car, you go put $10,000 on a loan on a car, and you're putting this interest. You're paying interest. Maybe right now a lot of them are getting 0% interest for however many months. But think about the opportunity cost of what that money is not going to throughout that month. So if you have a $600 car payment, what could that $600 go to if you didn't have the car payment? What could you do with it, especially in a time like this? When people are, the service industry is struggling, waitresses, waiters, that whole industry, any kind of service, events, musicians, and all that kind of stuff. They're all struggling in this time because of the COVID and what that's doing to our society. And what could you do with your extra money if you didn't have that debt payment or that loan payment that was going out every month? But basically, it is a score that allows other people to see how well you pay your bills. And back in the day, they did it traditionally. They did it where they would look at your utility bills and see whether you're paying them back, see whether you're worthy of making monthly payments. And so there are ways to. I guess I don't want to get too ahead of myself. But the main reason for the credit score is for you to borrow more money. And so if you're tired of borrowing more money, or you're tired of living paycheck to paycheck, why go down that road of, I have to have a good credit score, so I have to have my credit cards and keep that going and keep putting money on and keep paying it off and keep putting money on and keep paying it off? Why do you want that? And why do you feel like you have to have that credit score? And it's all because you want the option of being able to get into more debt. and it when we say it that way, it doesn't sound as appealing, but it is what we're doing. We're creating this illusion that we are good with our money, and we can express where we we can tell this new company that we can pay their payment monthly. We can afford what they're wanting us to pay. And so, but when you really look at it, what is the point of the credit score? It is to show we can pay the payment. But we don't really need that item if we can't pay for it in full, in cash. And so, I mean, and if you're familiar with Dave Ramsey and all of his teachings, he teaches that a house is the one thing he doesn't yell at people for. But I will say that you can get a house without a credit score. It's a little tougher. It's a little more of a process. You have to go through a little more things. It's not as bang bang quick and easy, but it's worth it because you don't have all the other stress when you move into a house that you've bought without all the extra debt that you have. It's one of those scenarios that you have a stress-free, like you move into the house and you're not stressed, you're not worried about your making your car payment and your new house payment now, and so it just creates, if you don't have all the other debt payments, it creates that level of peace in your finances, and so, I mean, if you know me at all, we've just built our house, and so we did that whole the non-traditional way. And it's possible. It's like I said, it's a little tougher. It's a little more of a process than the normal way, but it's worth it. And I'm even at the point of, I mean, the borrower is slave to lender. So whenever you have that debt payment, you have to make choices so that you can hold your word to that lender. And we have to make our choices. So in order to make sure we can make that payment. And so, but if you didn't have any debt at all, you can make whatever choice you want to, because you're operating, your monthly expenses are very low because you have no debt payment. So it really, we've created this illusion of a credit score to be a successful. That's what makes us successful if we have a high credit score. So anyway. It kind of gives you a little more detail on what it is, why they have it. They've basically ingrained it in us that we have to have one. There's no way around it. You're always going to have a credit score. You're always going to have a house payment. You're always going to have a car payment. But that's completely wrong. You don't have to have any of those. You can live life without debt, and it's the best way to do it. It does take some time to get out of a situation that you're in, but you can live a life without debt, and that's where we come in hand. That's where we come in and help people walk through their situation, help them see that light at the end of the tunnel, and help provide hope and give them more and more details into their situation, their specific situation, so that they can help see that it is possible and they can get there and they can start living a stress-free financial life. And so let's go into the house. When you're buying a house, it's called a non-traditional mortgage, where they look at your utilities, they look at your past rent history, and so there are some stipulations there that you have to have had a job for at least 2 years, steady, and then you've got to have a year of utility payments on time. You have to have a year of I guess there's a couple different types of utility. You can do your electric, your gas, water. You can do any of those things, but the main things are that your job, your rent, and some of your utilities. They look at a couple of those different things to provide them a risk of whether you're going to be a good candidate for that loan or not. And they also look at your debt to income ratio and same thing as what they do on a normal mortgage, but it's just in a different light or in a different way. So it does give you the option. You do have that option now. So if you're early in your stage, you just graduated college, or you have a lot of debt and you don't have a house yet, you want to buy a house, don't feel like you'll have to pay cash for that house. I would advise you to at least think about that, because it does give you that sense of peace without having anybody kind of putting their finger on you and saying you have to make this payment every year or every month. Sorry, just checking. So you have this. You have the option to go get a house once you're debt free, and you think about that. If right now you can't afford, if you can't get a mortgage right now because your credit score is too low or your debt to income ratio is too high, then they're saying that you're not worthy of that loan, which is probably a good thing, because they'll approve people for 50% loan. 50% debt to income. So if half of your money is going out in debt payments, and they still approve you, that's unreal. So we teach that you need your house payment needs to stay below 25% of your take-home pay on a 15-year fixed rate mortgage. And you can do all that with no other debt. If you don't have any other debt, you've got more leeway in there to play with and to be able to afford the house that you want. That's kind of the details of the credit score, what it is and why we think we need it. But I'm here to tell you don't need it. We've lived without. I have one now just due to the house loan. But we've lived with one without one for a while, and it has, as long as you have the cash to pay for it, a debit card, you can do anything that a credit card would let you do, anything online. You're not limited not having a credit card. There's always another way, and you just got to draw that line in the sand for you of what you want to do, where you want to go, and how you got to get there. I've got a question. People always ask me why, what is the emergency fund? What's it for? When do I use it? And then why in the baby steps do we only start with $1,000? And so the emergency fund, the baby emergency fund, which is the $1,000, is just to get you something to keep you from going back into debt. So if you have a car repair, or maybe some blown tires that you weren't ready for, or whatever it may be, you can cover those smaller emergencies. Obviously, if it's a large emergency, you're not going to cover it, but it's a matter of getting a little bit in the bank between you and bankruptcy, basically. So if you have a lot of debt you're trying to pay off, you want to put $1,000 in the bank just to give you some wiggle room. If you've got a little bit of wiggle room, you can cover some of the small unexpected emergencies that come up while you're paying off debt and you're going through this process. So you can go through that and just really kind of hammer down what's happening in your budget, and to see really what is emergency. I've had people try and put household items as an emergency, whether vacuum broke or whatever it may be. I need a new blender, I need a new this or that, or whatever it is. But those aren't emergencies. Those are wants. Everything we have in today's world is a want at some level. So you just got to be conscious enough to say, I don't need that right now. I can wait till next month. I'll put it in my budget, put it in my zero-based budget, and we'll look at that. Because you can always plan ahead, but if you let too many things bust your budget during the month, you're never going to get on track. You're never going to find that rhythm of the budget's working and so on. But emergency fund is just there to basically as an insurance policy to keep you from going into debt when something unexpected happens. They always say, you've heard the saying, grandma says, be prepared for a rainy day. It's gonna rain. No matter what, in some form or fashion, it's gonna rain. So just be prepared, and that's what the emergency fund's for. It just gives you that sense of peace that, as you go through your budget, as you go through your plan, something does derail you, you've got some money set aside. Maybe your car dies and you weren't prepared to buy a new one yet. Well, there you've got some money set aside to kind of buy you a new one. It may not be what you want. You may have to settle for something less than what you wanted to spend on, but it's a something that gives you a little bit of time. You buy it, you can always sell it 6 months later after you have some time to save up some more money to pay for something else in cash, maybe a little bit better car or better truck or whatever it may be. Job loss. It's big right now. Millions of people are unemployed right now. But having an emergency fund can give you options, especially if you're in the baby step 3 where you have 3 to 6 months of expenses. That can give you that sense of peace that most people don't realize. If you've never had more than $1,000 in the bank, then you probably never had this feeling, and it's an incredible feeling because you can make choices that you wouldn't have been able to make had you had a proper emergency fund. And I know that from experience that having to make choices job wise because you don't have any money in the bank, or because you don't have an emergency fund that can carry you for a couple months in between jobs, and it gives you a level of options, a level of choice that you don't realize you don't have when you don't have an emergency fund. Kind of goes back to the debt thing. If you don't have any debt, if you're zero debt or just the house, you have very little need to match your income, or to have the you can change direction a lot quicker, a lot easier, because you're not having to follow that debt stream and live paycheck to paycheck and always have that much money coming in, and then the next raise comes in and you end up spending it too. So anyway, that's kind of the basic of an emergency fund. We can always dig into it another time, but that's just kind of where that's the basics of it. I did want to go back on the zero-based budget. I know I've talked about this before, but it's the one of the biggest things that I think helps people in this process is to create that zero-based budget. I've got a link in my YouTube on my YouTube channel that kind of describes or details out what a zero-based budget is. But in summary, it's your expenses at the top of the paper minus your income at the top of the paper minus your expenses equals zero. And some of those expenses may be savings. Some of those expenses may be are food, shelter, clothing, gas, utilities, all of those things, plus all the miscellaneous stuff that you may purchase each month. Fun money, restaurants, that type of thing, entertainment, cable, Netflix, any of that stuff. So plan all that out and you can create your zero-based budget. Now, there's going to be it's going to take you a few months to get the hang of it, but what I would encourage you to do is go back to last month and look at those, look at all the transactions you made last month and see what is, what's coming out, and where would you put that in your category? Would it be groceries or gas or miscellaneous or restaurants or whatever it is? You look through those transactions of last month and kind of give you an idea of how much you're spending where. And I've seen people, they do that exercise and it creates, it gives them my eye opener, and they're like, I spend that much on restaurants. I've had people spend anywhere from $1,000 to $2,000 a month at restaurants. And I was teaching an FPU course a while back. I guess it's been about 2 years, and this couple was spending $1,800 at restaurants, and it was just the two of them a month. So, and then once they saw that number, it kind of made them realize what they were doing with their money and why they felt like they were living paycheck to paycheck, and they couldn't. They felt like they couldn't get to that next step. They couldn't. They weren't making any progress. They felt like they were just treading water, and that's what it makes us feel. If you feel like you're a rat in a wheel, is you're just going, you're month to month, paycheck to paycheck, and it's mind blowing when it's mind numbing when you get to that point. We want more for ourselves, and we want more for our kids, but you got to do something about it to get you there. I think that's all I've seen come up. I did want to mention we're gonna be changing our Q&A. I don't know what day, what time yet, but I've got to change it due to some other things happening on Wednesdays. So I did want to mention that. So for those of you that kind of or like to come here each week, you'll be kind of ahead of the game on there. But I'll post it. I'll put it on there. I'll change the event time and everything. But if you have any questions, just reach out to me. Shoot me a message. Let me know what your question is, and we'll get to it. I'll put out something before the end of the week this week, letting people know when it's going to be next week, so they can kind of prepare for that. I'm thinking Thursday, but again, I'll confirm that and shoot that out to everybody. But anyway, if y'all have any questions, feel free to give us a call. Let us know what your question is. But I'd love to help you out. If you know anybody that is struggling with their finances and needs just someone to walk with them, someone to kind of guide them. I don't do it for them. I let them kind of look through the numbers and go through the exercise. But what I'm here for is to help you build a firm foundation for your finances. We go through a 12-step process that goes anywhere from insurances to is bankruptcy an option, or what are your debt payments? How can we orient those to get them paid off quicker? I mean, I basically set all of my clients up on this plan, and I give them it's a package over a 9-month period that we go through 12 steps, and I'll walk you through this process of how to budget, how to do this, and then as we go monthly, I'm helping you on the budget, but we're also attacking these other avenues in our finances, whether it's insurances, our wills, what do you want in your will, what needs to be in your will, and I work with other vendors to help me do that. And so what I'll do is when we get to that step is I'll send you over to them. We'll do a consultation with them, and for them to kind of narrow it down to your specifics and your situation. I want to be able to help you build your foundation and create that game plan for where you want to go and where you want to retire. What does that look like for you? And all of these things have to play into it. Retirement is one of those steps. Is my 401k in the best investment option, or what can I do? I have a pension, I have this and this and this, but I would like to be here and I need to do something more. So where can I go? Is a Roth IRA the best option? So we kind of look at all that and we detail it for your situation, because everybody's going to be different. Everybody's going to have different nuances that they want to look at. But again, if you know anybody that could benefit from that, feel free to let them know. Let them get in touch with me. I'd be happy to help. Anyway, if y'all have any other questions, we'll be back next week. Thanks.